This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Don't call it a comeback. I've been here for years. I'm rocking my pants, putting suckers in fear, making the tears rain down like a monsoon.
All right, so we were talking, certainly the risk trade is on, and it does feel like we're seeing fairly broad-based buying in today's trade. But if you take a look at Boeing, Tim, it's definitely a different tone. Boeing shares are definitely down.
Yeah, 6.5% as we speak. Investors offloading shares. They're absorbing, the shares are, possible fallout from this weekend's accident. Boeing stock slumping the most in more than a year. This after its 737 MAX 9 model has been temporarily grounded by authorities following a January 5th incident that was Friday night involving a recently delivered plane. So, Carol, here's what we know about the company and the biggest U.S. exporter. The 737 MAX aircraft is a crucial cash cow for Boeing, and we continue to report out and digest the details.
Yeah, we certainly do. So let's get to it with Bloomberg News aerospace reporter Julie Johnsson. She has been on it for us throughout the day, in the morning, all of it as it was happening on Zoom from Chicago. So, Julie, a lot coming out. What's the latest in terms of what we know about exactly what happened?
Okay, so just to review the facts really quickly, super close, scary call Friday night with this Alaska airplane where it's called a door plug, but it's a section of fuselage, blew out a few minutes after the plane took off from Portland. Fortunately, nobody was killed. Nobody was sitting next to the section that failed, or it might have been a different story. So we know that. And what we don't know is why and how it failed. The NTSB is on that case. But it has revived all these very damaging narratives around MAX that Boeing's been working so hard to put to rest following two crashes in 2018 and 2019 and a grounding. And this is their prized plane. I mean, it's really the driver, the engine for the company. And so the reputational hit is significant for Boeing, and it probably is going to be longer lasting than this incident.
What do you mean by that, longer lasting than this incident? You mean that, because I just got to tell you from personal experience, when we covered, as you did, Julie, the 737 MAX issues following the two crashes just a few years ago. Wow. There were so many people who were like, I'm never going to fly on one of those things. Never, ever, ever. And now, three different variants of the 737 MAX are taking many different flights every single day without a consumer seeming to care.
Right. And so I'm not actually thinking about just to be clear, I'm thinking more from a regulatory perspective and customer sales. And also this is a huge year for Boeing in terms of getting its factories in order. And this also plays into this damaging narrative to customers that Boeing's got a flawed product and quality problems that they can't get a handle on. And do I really want to go down that path with this aircraft? I mean, that's where it's damaging.
One more point there real quick, Julie.
Yeah.
Do these airlines really have a choice when it comes to the airline they buy? There are two companies that make these, right? That make planes like this. Airbus.
Right.
And there's Boeing. And Airbus has the A320 family that competes with the 737 MAX. But, I mean, aren't the switching costs incredibly high? Like, totally training new pilots and everything?
Yeah, they are. And also Airbus is sold out through the end of the decade, by and large. Boeing has a big backlog on this plane as well. So switching is not an easy thing. But a lot of airlines have mixed fleets. And so maybe you start to tilt your orders more to Airbus down the line. Right. So that's the big unknown. In terms of this actual incident, there are some very intriguing clues that the NTSB is sorting through, and including a maintenance visit before the plane went into service. So, I mean, And so often with these accidents, what we think is the conventional wisdom, a day or two afterwards winds up being not the case at all. So the inspections are underway on this fleet, and they could be back in the skies within a day or two. And so from that perspective, this could start to recede very quickly. But it's the reputational.
Yeah, which I want to get into, but help us be smart, because you know this world. So we hear 737 MAX, and the hairs on my neck go up, and I think about the two deadly crashes, the 737 MAX crashes about 5 years ago, right? That totally shook confidence in the company. And I think I remember Tim and I, like, when they came back and we're like, what plane is it? Like, do we want to be on a 737 MAX? This is a Model 9. How big? I mean, this is such an important, as we said, a crucial cash cow for Boeing. How big is it in terms of Boeing's business, its balance sheet? How big is it in terms of the airlines that we watch so carefully that need new planes or have new planes of the ilk, if you will, among their fleet?
Yeah, and I'm so sorry. I should have those numbers at my fingertips, and I don't. But in terms of contributing to revenues and profit, I think it's in the neighborhood of 30% of the company's the money that keeps Boeing running comes through this aircraft.
And that keep going. Sorry.
But yeah, anyway, it's far and away Boeing's biggest seller. It's a really important plane. On the consumer perspective, I'm a little bit jaded. Because I've just seen this play out time and time again over the years, and everybody says, "Oh, Max, no way," or before it was the 787 Dreamliner. And for a very brief period, we had some hinky crashes involving some Airbus planes, before social media really got going. But the fact is that you offer people better pricing. And they quickly, I hate to say it, but the concerns seem to fade. And most people cannot tell, step on board a plane, they can't tell an Airbus from a Boeing, from an old generation 737 to a MAX. They look and feel very similar if you're a traveler.
They're not.
So
Tim Stenovec, who, like, before we even go together, if we're flying somewhere for work, he's like, we're flying on a blah 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 blah, and he'll know all the details, and it'll be like, where you want to sit and where you like, you do. It's really fun.
When you're on like a plane like this, the Airbus is a little wider, and if you're in economy, you can really feel it. Anyway, we can get Julie and I can talk about that offline, which we do sometimes. So Julie, when you think about, in all seriousness here, I was really surprised to hear you say that these could be back in the skies this week. I mean, Paul Sweeney is set to take one of these planes to Aruba later this week. He talked about it on air earlier today. And I said, no way, Paul, there's no way they're going to fly this on Friday. Am I going to be eating my words?
Yeah, I think so.
Wow. The design that's in question right now, this door plug, or this component that's being scrutinized, it's been in Boeing planes since 2006, and there's never been a failure like this. And there was another plug on the plane that was intact. So that's code for an installation problem or a maintenance error. And if it were a design flaw, and the NTSB is looking at everything, by the way. So. But if it were a design flaw, that would be a lengthy grounding, and it's not looking that way. FAA, has signed off on these maintenance procedures that are only it's like 4 to 8 hours. So do you think it could be coincidental that it's on a 737 MAX and not if these plugs have been used, or are these plugs only used on 737s?
They're not just used on 737s. Airbus also has similar plugs, their own design, on the larger A320 family.
Okay.
So it's not some crazy new concept.
But it could be let's say it is a maintenance issue, very briefly, a maintenance issue or an installation issue, then it's kind of coincidental that it's on a 737 MAX and not on a different plane.
Yeah, exactly.
Okay.
Exactly. And then the questions are also complicated, and it's like, well, Boeing tests all of its aircraft really, for everything. And the FAA is right over, looking over their shoulder. FAA signs off on everything on a new plane right now. Their inspectors are on site. So it's like, well, how on earth did you miss something that caused this depressurization?
Right.
And so if it turns out that it's Boeing, they're going to have to go back and have a real come to Jesus moment, and with their procedures.
Well,
if it's not a Boeing moment, if it was, happened after the plane left Boeing, then that's a totally different matter. It's just a horrible, horrible coincidence.
Well, certainly something I know you'll be all over. Bloomberg News aerospace reporter Julie Johnsson on Zoom from Chicago. Shares of Boeing, by the way, down 6.6%. This is Bloomberg Radio.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
I feel like we should be playing It's the End of the World as We Know It, because it just feels like...
That might be on the list today. I don't know.
The amount of risks that are out there are just kind of freaking me out here in this new year. And I'm not like someone who's like, Chicken Little. But it just feels like we just talked about climate change, and it's expected to get hotter than even last year.
Yeah, and then there's, of course, the geopolitical concerns that we've been highlighting as we closed out 2023 and kicked off 2024. I mean, look at shares of Maersk today falling because they denied that they've reached an agreement with Houthis to stop attacking ships going through the Red Sea.
The business impact already happening.
Yeah.
When it comes to risks overall, engaging and analyzing their impact, the Eurasia Group is always a go-to, and the company's report on top risks predictions for 2024 points to a year of grave concern. So let's get into it and to some of the risks with Eurasia Group Chairman Kupchan. He is at the Bloomberg News Bureau in Washington, D.C. Cliff, so nice to have you here with Tim and myself. I want to say welcome and Happy New Year, but I feel like it might not be a good year. There's lots of reasons out there. Is that a fair assessment? And is it more than any other year in recent time? We just dealt with a global pandemic a few years ago. Go back in 2008, we had a global financial crisis. We've had some really big things that we've had to deal with as an individual, as an American, as a global citizen.
I think what separates this year from recent years is the number of wars going on. We have two kinetic wars going on, Ukraine and Israel, Hamas. And that's a lot of wars. I think we have to ask ourselves, why two kinetic wars? But in addition, and the way we like to think about this report, there's really three wars. It's the two I've mentioned, and about to begin is the U.S. against itself, which in many, many ways will be the world's more serious war because it pertains to the world's lone remaining superpower. Three wars with no guardrails, three wars that we think have no leaders that can really fix the problem, and three wars where the two sides don't even necessarily agree what the war is over. And that's really pertains to the United States. So, I think risk is a thing that we always worry about, but this year it's got a real edge to it.
Does it feel like investors are ignoring the risk out there? I mean, we're almost at all-time highs on the S&P 500 right now.
I think on the potential for escalation in the Middle East, there's a bit of a head in the sand thing going on. I mean, for instance, I would be surprised if the U.S. didn't hit the Houthis pretty soon in Yemen.
Wow.
How's Iran going to react? Don't think they'll do much, but I sure hope they don't. I think that's one aspect in which investors have their head in the sand. But the bigger one is what's about to go on in this country. We're about to see President Trump get the nomination in a couple of months, and then, we're in a new era. We're in an era where he gets the media, he controls the funding, he controls the TV. He'll pressure on Biden to do something on Iran because Trump will be way to the right of him on Iran. The Ukrainians are going to wonder if they're ever going to see another dollar from this country again, which I think is a very good question. So I think the main risk that, at least over the medium term, the U.S. isn't going to tank anytime soon, but if we see another Trump presidency, I think everybody's going to ask themselves, is the U.S. good for its promises? Is the U.S. the haven, the safe haven for money that it's been since the Second World War? Those kinds of questions are going to be honest.
Cliff, I've got to say, this whole idea of the U.S., basically at war with itself, against itself, and really the division and questioning American democracy. And I do wonder what happens on the other side. And we're a young nation still, right? And I look at some of the older countries. There are often times where they're questioning kind of what is going on internally. Is there something from history that you think we can draw upon to kind of figure out and say, well, this is kind of normal in a young country's history, and try to figure out and maybe make some conclusions about where it goes from here?
I can't think of a democracy. Look, this is kind of unique. We have a guy running for president in a democracy who tried to curtail, to be nice to him, democracy last time we saw this movie. I think the only analogy, and it's not from distant history, but what happened to Hungary after Viktor Orban really got his mitts around it? Well, is Hungarian democracy ever going to rebound? Polish democracy did. Hungarian democracy? I don't know. So there's a real question as to how much we can absorb, how much damage the U.S. can take the second time around. I don't think history is a very good guide because this is really very ahistorical and rather unprecedented.
What would be your message to politicians? Because I think that people within Trump's party, I've been very surprised to see the way that they've rallied around President Trump after January 6, 2021. There are many, many politicians out there, including those running against him, who would support him to be the nominee. What would your message be to these folks who studied at some of the nation's and the world's most premier colleges and universities, who have law degrees, who see no problem with another Trump administration?
First, I would say don't take what you have for granted anymore. This is a very fragile democracy that was invented by a bunch of geniuses. When you think of how they sort of controlled human nature and the greed that's within all of us, but set up these checks and balances so nobody can really get away with it. But it's fragile, and it's fragile to a huckster, to a really good politician like Donald Trump, who can, who can feed scared people and induce them to vote for him. So I would tell politicians to sort of get real and be very jealous of what you have, first of all. But secondly, I think the rest of us here have to really, not respect wouldn't be the word, but be very cognizant of what's going on in this country. That, when I go home to Wisconsin, when I go home to central Wisconsin and talk to people, and 80-90% of them vote for Donald Trump. And these are church-going, God-fearing, good people. Give them their money at night and give it all back in the morning. They're very honest people. They're scared. They're misguided. They get bad information. But I think all of us have to sort of see this guy as legitimate, and then sort of look within ourselves and say, how did we get here? Because we're not in a very good place.
I felt that way about the uprising and the siege at the Capitol. Like, I want to understand these people. Why are they doing this? Why are they? I kind of want to understand why someone thinks that way. I don't walk around in their shoes, and they don't walk around in my shoes. But I kind of want to understand. How do we do that though, where people, in terms of how they get their information, it is often a chosen source, one source, which can lead to kind of this vacuum, and it can potentially be a vacuum of misinformation.
Well, we all got to make an effort, and I didn't, join you today, come on the radio to tell stories, but I'm going to share one quick second one with you. So I was on vacation during COVID. It was in West Virginia, and I called the Central Committee of the Republican Party of XYZ County. It was a real county, and it was a real conservative. And I took my 15-year-old son. We met with him for lunch, and it was the most fascinating 3 hours I think I've had in a long, long time. These far-right Republicans felt like they had seceded from America, felt like nobody in Washington cared what they thought about, and they said I was the first person from Washington they'd ever seen. And I think there's an actual conversation to be had somewhere. Nobody's trying. These aren't necessarily bad people. They're scared people. But I think there's got to be some kind of trust between these two poles that are just widening and widening and widening. There's got to be some place in the middle where we can have a conversation, because we all are decent people. We all come from the same founding fathers, but nobody's trying right now. We're all just getting further and further into our nativistic corner. So the trend line's not good. I don't think it's inevitable, but it's not good.
Well, you may have not come on to tell stories, but we certainly wish you did, because we feel like it's very, realistic now in terms of what's going on, and really resonates and plays to some of the risks. As you say, the number one risk that you guys have identified is the U.S. versus itself, which is just wild. Come back soon. Come back soon. Do you think we'll get 20 seconds come out in a better way, or it's 50-50 at this point?
Well, let me say that there are really good stories out there.
Yeah.
Mexico, after Ms. Sheinbaum is going to be, I think, a really good president of Mexico. Modi's going to get reelected. India's headed in a good direction. There are good stories, and I think we should, next time I come back, maybe we can do the good news, because there's good news.
All right. Okay. Promise.
Deal.
Promise.
It's a deal.
You open invitation. So appreciated. Eurasia Group Chairman Cliff Kupchan joining us from our bureau in Washington, D.C.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Oh, the weather outside is frightful, but the fire is so delightful. And since we've no place to go, let it snow, let it snow, let it snow.
Little Dean Martin for you, everybody. Let it snow, let it snow. You might have played that around the holidays, but, we thought maybe a storm this past weekend might have brought us a little snow. It didn't for those of us here in the New York metro. Some maybe further out west in New Jersey, but not much. Our ground certainly too warm and to make anything stick, but it's very different, Tim, from what I grew up with. And I grew up just outside New York City.
I know it bums you out. You love snow.
I love snow, big time.
Also, skiing out west, you saw the pictures from December. Mm-hmm. There was very little snow in places that typically have lots of snow. We saw a sell-off in Vail Resort stock last week, actually, after a downgrade as a result of that. Bloomberg Opinion's Mark Gongloff notes that storms will keep happening, but the long-term trend is warmer winters with less snowfall, which will bring severe consequences such as water shortages and lost economic activity. We love reading Mark, even though sometimes, Mark, it's not
depressing.
So happy. But we always end on a high note, okay? Mark is Bloomberg Opinion editor. He's with us
Still
here in our
love you.
Bloomberg Interactive Brokers studio. You can read Mark's story and more from Bloomberg Opinion on the Bloomberg or at bloomberg.com/opinion. It's not pretty, Mark, because when you think about snowfall, it's connected to a lot when it comes to our ecosystem and our economy.
Yeah, I'm the opposite of Carol. I really can't stand snow, but the more I studied snow, the more I realized how much we're going to miss it when it's gone. It does so many things for the economy. It's about a $20 billion industry. The sort of ski, winter snow, winter sports adventure industry, tourism. But beyond that, it also the snowpack in the mountains. It melts slowly, and so it provides key water sources during like the spring and summer months, and particularly out west where they're maybe going through a drought, or this will provide them the water they need. So if there's not a lot of snow, they don't get that much water. It's important for biodiversity. Plants and animals love it. Winter wheat needs it. Fruit and nut trees need it. I could go on and on about all the things that snow does beyond just look good and bring back feelings of nostalgia. But it is kind of a bummer. Just generally, I think, just to see it change, and it has already changed over the decades. There's just less snow. Generally, the snow seasons are shorter, and that trend looks set to continue.
Well, and we used to build igloos and, tunnels, and it's just kind of crazy. We just had so much snow, and it stayed with us for weeks, if not months. It didn't go away. Having said that, this idea, I always think about, Mark, years ago, people just, you talk about water being this precious, important commodity that we could run out of. And I feel like Maybe not, but it feels like we are certainly having conversations around that for certain areas of either our country or just around the world.
For sure. The Colorado River and California and so much out
Panama
west.
Canal.
Well, there's that. And I've just been talking about the U.S. so far, but this also applies to Europe. We've seen rivers running dry in Europe. They also depend on a lot of snow melt. This goes all the way across to China, but particularly in the northern hemisphere and unfortunately, the colder the places are, the faster they're warming. And winter is warming faster than other seasons, and colder places are warming faster. Now, some of these colder places will still get snow, because one of the weird things about climate change is that the atmosphere holds more water because it's generally warmer. And so if you're far, far north and you get a storm, you'll get dumped with a lot of snow. The Great Lakes Chicago could end up dumped with a bunch of snow because the Great Lakes won't freeze, but that causes lake effect snow to be heavier. So it does weird things,
right.
But overall the trend is less of this stuff. And so we need to plan ahead for that. We need to figure out what we're going to do.
And we're doing that, right?
Well,
sorry, a little sarcasm.
Right. Yeah. I mean, unfortunately, we are to some extent. I mean, we're in the Colorado River area. Those states and the federal government are trying to bang out agreements to use less water. Arizona is, taking care of its precious water. So there are on the local level things that we're trying to do. But the biggest thing that we need to do is to sort of put the brakes on heating up the planet, and that is moving a little more slowly.
Are we doing that, Mark?
Are we heating up the planet, or are we not heating?
Are we putting the brakes on heating up the planet?
We're tapping the brakes gently when we really kind of need to be slamming them, I think.
Yeah.
Well, I was just thinking about like Mark's story. Then we had that other story that you and I were floating around with, that how scientists are already getting ready for a record-breaking heat once again this year.
Yeah, so Mark, connect that to us to climate when we think about temperature and weather and climate, because I think there's a lot of confusion out there. Like if there's a big storm this year here in New York, guarantee you'll have people on Twitter who are saying, and politicians even, who will come out and say, yeah, Trump has done this in past years, saying, where's the global warming? Yeah. That sort of thing. So to make the connection for us, talk about the trend. Yeah,
and I've gotten them in my email inbox all day today. Hey, it snowed here by me. I mean, the thing is that, it snowed like a foot in upstate New York. It's still going to snow. This year could be the hottest year on record, partly because we have an El Nino weather pattern going on. The weather is crazy and it's unpredictable, and climate is very chaotic and complex. So you have to look at very long-term trends. And so, yes, we could hit a record high in temperatures this year and then go back down next year when La Nina comes back or whatever. And we could have big snowstorms, and these things will keep happening. But the thing is that they're going to happen less often, and the weather will become more chaotic. But you can look at the long-term trends and see less snowpack, less snow when it falls, heavier snow when it falls because it's just wetter, more rain. You can look across the United States and see more rain than snow, just on and on with those things that you see. And the global temperature is also creeping up steadily when you look at the averages over the long term.
I feel like the trends are so clear. So when you think about policy and smart policy, how does it have to be developed? Is it state by state, or does there need to be kind of a federal, you look at the United States to say, hey folks, and there is, I'm sure, but I mean, even in a deeper way of saying we've got to think about this as a nation in terms of where water supplies are, or where there aren't, or where there's going to be significant changes. Yeah, I mean, it's a whole of economy kind of solution. And, you have to have government providing some incentives. The green energy industry, renewables, EVs, they all have a certain amount of momentum, and they are growing. And there is when it get toward more positive stuff, there is possible for like hockey stick like growth in these things, but they often need assistance or encouragement from bigger governments, and that could be state governments like California, which is obviously by itself would be one of the biggest economies in the world, but the U.S. government, all of these things are sort of working together to sort of provide these incentives to help get private money involved too, for these solutions. Does it make you worried? Well, for sure, yes, it makes me worried. But again, I guess if I'm trying to be optimistic about it, it makes a lot of people worried, and it's making a lot more people worried now than it did maybe 10 years ago. Yeah. And so you are seeing more money and more attention going into these things. And when people see the effects firsthand, when we see wildfire smoke in the streets and we can't breathe and we're running out of water, it focuses people's minds on solutions. You talk about that a lot, Carol, that, over the summer, seeing those red skies, was something visceral
but I don't know if it makes us change our behavior. Maybe it makes us change the way we vote. I don't know.
I still don't have an EV.
Yeah.
Yeah, but you also didn't buy a new car in the last,
That's true.
Well, they're very expensive.
Yeah.
I mean, so it's problems like this we need to solve.
Come back soon, because I know that this is something we certainly are interested in. We know the audience is. Bloomberg Opinions, Mark Gongloff joining us here in studio. This is Bloomberg.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we've got about 18 minutes left in today's trading session, but we've got stocks at their best levels of the session. As you heard from Charlie, up more than 2% on the NASDAQ, a 309-point gain. The Dow up more than 200 points and 1.4% higher on the S&P 500. Everything is awesome, Tim.
Is that true? I mean,
No.
it's a little
There's a
different
little
than
sarcasm
last-
in there.
Yeah, I know. Well, who knows?
We're going to talk about it later when we talk with the Eurasia group, right? Because they've got...
Everything is not awesome should be the title of their 2024 note. There's a lot of risks out there.
You're going to run for your bunker.
Hey, let's see what Michael Sheldon is thinking about all this. He's Executive Director and Chief Investment Officer at Hightower RDM Financial Group. Michael joins us on Zoom from Westport, Connecticut once again. Happy New Year, Michael. I think I can still say that. We haven't spoken in a few weeks. How are you?
Same to you.
Thank you. How are you thinking about this?
Well, I think it's nice to see the market rally here after a couple of days of profit taking. I think sort of looking ahead to 2024, there's certainly going to be a number of twists and turns, but I think the bigger picture for us is, for example, going into 2023, most economist investors were not so optimistic. They were looking for maybe a recession or a downturn in the economy, but that really didn't play out. The economy and the markets were extremely resilient last year. Although the rally was really led by a few stocks until later in the year. But I think heading into 2024, I think more investors are sort of moving into the camp that the Fed could ultimately pull off a soft landing. So right now we're in the glass half full sort of category as opposed to the glass half empty. And there are certainly some positives out there, but obviously there are some headwinds. So it's early in the year so far.
It is early in the year so far, certainly, no doubt about it. And yet, I feel like there's some interesting offerings out there for investors. And I want to kind of run it by you in terms of what your investors are asking you about and what you would kind of say. We just talked about a spot Bitcoin ETF. If and when everything goes through in terms of the approval, will you be recommending that to your investors? And are your clients and investors asking you about it?
We haven't had too many questions about Bitcoin, to be honest. Occasionally, from time to time, it's not something we've really gotten involved in. I think for Bitcoin, it's always been tough to sort of get your head around how to value that. So,
Amen. Hallelujah. Totally in that camp.
Well, you just take the free. All you got to do is take the free cash. Michael, you got to take the free cash flows from Bitcoin, and then you got to find the discount rate. It's pretty. Oh wait, there are no.
I'll come to you for that.
Yeah, no cash flows.
So no, you're not getting a lot of questions about it.
No, we really haven't. I think for us, we're financial advisors. So, I mean, ultimately, it comes down to we're dealing with high net worth individuals. We put together a financial plan. We figure out the rate of return they need to meet their long-term investment objectives. And our job is to build diversified portfolios. And we don't want to stick our neck out too far. But over time, stocks have tended to be the best way for investors to build wealth. So we want to have diversified portfolios. And that's sort of how we're looking at this year.
Will that diversification include private equity? Blackstone raising $1.3 billion for its first private equity fund for rich individuals, so achieving one of the biggest initial hauls for a fund of its kind, despite a delayed launch. We've had a lot of conversations about folks wanting to kind of democratize access to private equity. Is that something that you would recommend that there's a place in a portfolio for your investors? And are they asking about that?
So most of what we do is individual stocks, mutual funds, and ETFs. But for clients, where appropriate, for high net worth clients of a certain level, where they can afford the illiquidity that comes with private investments or alternative investments, we do market those, either private equity, private real estate, hedge funds. But again, it's client by client, where appropriate. And a lot of these products do have illiquidity, so that's something you have to be aware of.
What about Apple? How are you thinking about Apple right now? It's actually higher today by more than 2%. Jefferies, though, out with a note that says iPhone sales in China are set to fall double digits. A lot of concerns about China, a lot of concerns about slowing revenue growth for the company. How are you thinking about it? Would you recommend it?
2 downgrades last week, too.
Well, I apologize, but we're not allowed to mention individual stocks. But what I would tell you is that we have held that in our portfolio probably for more than a decade and we're big believers in technology. We own many of the large mega caps. So in a number of our portfolios, we held, I think, 4 of the 7 mega cap companies from that did so well last year. So many of our clients are benefiting from the AI and the technology. We do believe in technology over the long haul. I think AI is probably in the early innings. In terms of individual stocks, it's sort of case by case, but clients should have a fairly healthy weighting in technology because that represents the growth part of many client portfolios.
Well, that's interesting, too, because I do feel like some of the conversations we had at the end of last year, despite everybody saying, okay, Magnificent Seven, you've had your run, it's time for a broadening out. We did see a broadening out late last year, and I think it's safe to say to some extent continuing to this year. But they also did say it doesn't mean you pare back on those Magnificent Seven because, as you just said, that's the growth part of our economy.
Yeah, I mean, one of the things we try and talk with our clients about, it's time in the market, not timing the market, that really helps you build wealth over time. So, I mean, some of these stocks, some of these large cap technology stocks are going to have pullbacks from time to time, but trying to time the short-term swings in these stocks is really very difficult. I think you really want to have some exposure in tech and try and find the areas within technology broadly that will do well over time.
So that said, if you missed the rally that we saw at the end of 2023, you've got a client who has cash to deploy. How do you deploy that?
Well, there are a couple of options. We're relatively optimistic for this year. You've had the unemployment rate below 4% for 23 straight months. Wages continue to rise. Inflation is coming down. Corporate profits were flat last year, and they're currently forecast to be up about 10% this year. So I think there are some reasons to be positive. There are certainly some headwinds. Geopolitical events around the world are one of them. Valuations are not cheap. One of the big question marks really is the timing and how many rate cuts, we'll get from the Fed this year. But I think overall there are probably, at this point, more positives than negatives. So for clients that are very nervous but looking to get into the market, you could what we call dollar cost average. So you start to put some money into the market now, maybe wait a month or 3 months and add some additional money. If you're looking out many, many years, 10 years, 20 years, 30 years, really trying to time the market is not worth the effort on that. But again, it all does come down to an individual's financial plan.
Hey, one last question. As we talked about the broadening out of the rally, you shared with us some notes. We've talked about this with our Gina Martin Adams. I mean, we are looking at 91% of the stocks in the S&P were above the 50-day moving average at the start of this year. 77% were above their 200-day moving average. You shared that data with us. We've had some similar from Gina. 30 seconds left here. That broadening out is a healthy sign as long as we don't get recession? Real quickly.
Yeah, I think that definitely is a healthy sign. If we continued the way we were last year with a small number of stocks outperforming the market, I think that would limit the market's upside. We've seen, adding to what you said, we've had several days where the advancing versus declining stocks has been above 5-1. And until things get really exuberant, I think overall, while that can be short-term anticlimactic, this type of behavior, longer term, I think it's healthier for the market.
All right, great check-in. Covered a lot of ground. Michael Sheldon, thank you so much. Happy New Year from me as well. Executive Director, Chief Investment Officer at Hightower RDM Financial on Zoom from Westport, Connecticut.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.